got a lot to cover today. Big changes coming to the city of Vaughan. The TREB numbers came out for the month of September. What does the Indian fiasco that this PM has contributed to going to do to housing in Ontario? And Canada's regulator gonna make some moves. It's episode 150 of the Wise Old Owl Show. 150, never thought I'd get to this level. But I wanna thank everybody that's tuning in. I really appreciate you taking the time to tune in today. Let's start off with what OSFI, this is the Office of the Superintendent of Financial Institution, their head, Peter Rutledge, came out today and indicated that there's going to be some changes very, very soon in the mortgage business. And everybody's wondering, well, what are those changes? Well, let's give you some data. So right now, the Canadian regulator has pointed out a concern about the mortgage portfolio. Not a big concern, but a concern. 1 out of every 5 mortgages, 20% at the big banks is basically in a negative amortization. So what does that mean? That means that any mortgage at CIBC, BMO, and TD have amortizations that are going the wrong way. These are called the Buzz Lightyear Infinity and Beyond mortgages, which means that they may have started off owing $500,000 and now they owe more than that. They're going the wrong way. They're actually in negative amortization. They're not stretched beyond 35 years. We're talking they're in negative territory. They're not paying anything down. They're actually moving the wrong way. So this is a big, big concern. And we're talking about $130 billion in mortgages at these 3 banks that have negative amortizations. To put things into perspective, there is $2.1 trillion in mortgage balances at the banks. This represents about a 12% number because $250 billion of mortgages have amortizations in excess of 35 years. Royal Bank, they don't allow negative amortization because they have to allow you to make at least $2 in principal reduction. So it's almost on an infinity plan to a degree, but the reality is it's not negative. You know, it could be 100 years or something like that. I saw one at, I think it was 97 years, was the worst one I saw. Other ones just, you know, they go blank because they can't calculate more than 2 digits. The reality is they're taking shape. There's gonna be rules coming out at some point this month about how banks are going to have to deal with these negative amortizations and situations that involve extended amortizations beyond the 35 years. We're gonna find out how that all shakes out. It's gonna be really interesting to see how people are going to react to possible payment shocks. And this is on top of the folks that are coming up for renewal. Every month, there are 100,000 mortgages that are coming up for renewal. And that is significant, folks. And as I pointed out on many episodes prior, we haven't reached peak renewal pain yet, okay? At the end of 2023, there's only gonna be 47% of clients with mortgages that are gonna experience that renewal pain. And then at the end of 2024, we're gonna hit 65%. So as you can see, over the next 12 to 15 months, we're gonna have a big chunk of folks dealing with tighter budgets, increased payment obligations, and they're gonna start feeling the pain. Those folks that have been benefiting from those low rates and those fixed rate mortgages for the last 5 years, I hope you pounded down your debt, because the reality is that was the smart thing to do. Owe less at renewal so you don't have to experience this peak renewal pain, which is coming, folks. And the bond market was on a roller coaster ride the last few days. Earlier in the week, it hit almost 450, prompting the big banks to hike their 5-year rates again. The 5-year Canada bond just went on a little roller coaster ride. It settled back down the last couple of days into that 430 range, but boy, it prompted lenders to spike rates again. This is going to be a challenge. We are seeing 5-year fixed rates in the mid-6 to high-6 range. We're going to touch 7 soon, which means the affordability meter to qualify for a mortgage is just going to become that much more difficult. The next thing I want to talk about is the TREB stats. Okay, Toronto Real Estate Regional Real Estate Board came out with their September stats, and they were dismal. They were absolutely shit. It was a gong show. Only 4,642 properties sold, down from 5294 in August. They always report a year-over-year number. I don't like the year-over-year number. I like month-to-month, okay? And these numbers are absolutely crazy low. But new listings are up to 16,258. This is up from 12,296 in August, up 32%. Sales are down 12.3%, and active listings are now approaching 19,000 at 18,912, up 22%. This is not good. And for the folks in Toronto, if you're a realtor in Toronto, God bless you, because it's going to be ugly. On the low-rise front, okay, in 416, there were only 885 sales in the month of September. September's supposed to be the month, the fall's supposed to kick in, the market's supposed to heat up. It's going to be a shit show. This Thanksgiving weekend, I believe there's going to be a lot of people with their hand out looking for help. Expect it, folks. You know, you're going to see relatives, family, brother, sister, cousins, whatever it is. There's going to be some people looking for help. So if you have the opportunity and you have the resources to give somebody a helping hand, expect it to happen at the Thanksgiving table when they get you in your sweet spot and at a point where how can you say no? So expect it, be prepared for it, and chances are it's going to happen across this country on many occasions, so just be prepared. Big changes coming to Vaughan, okay? Today, Trudeau was visiting Vaughan to announce the second funding of the accelerator housing fund, okay? Like Vaughan is the recipient, the second recipient of $59 million to expedite permits, eliminate red tape to get more houses built. They follow London's announcement a few weeks ago. So we now have about $133 million that have been spent out of the $4 billion that has been earmarked for this type of progress. So we've ripped through about 3.3% of the $4 billion in a year and a half. Not a lot of progress. The big thing that happened out in Vaughan is that they are going to amend a bylaw that will allow the construction of 4 units on one lot. This is big news for the city of Vaughan. So now all of a sudden, with this amendment to the bylaw, someone could turn their home into 4 units, legal units. Now, they might have to meet building codes and certain setbacks and requirements, but the fact that people could build a 4-plex on a lot as of right is big news. They followed the footsteps of the city of Toronto. You know, Vaughan is the city above Toronto, and this bodes well for those that are looking to repurpose homes, make them a little bit more valuable in the sense of getting an additional return by adding rental units. So this is good. This is very, very positive news, and I think it's exciting. Now, as far as the accelerator fund, it's not moving fast enough, folks. Like 3.3% in a year and a half, you got to get this thing going. And these 1,700 homes that Vaughan is planning on building is going to take 3 years. So don't think that this is going to happen overnight. They do plan on building about 40,000 new homes under this directive over the course of a decade. That's about 4,000 homes a month. And listen, the city of Vaughan has been one of the most fastest growing cities in the country. They grow by about 7,000 people a year over the last 20 years. They plan on growing by about 7,000 new residents. So this is good. This is good. So hats off to the folks of Vaughan that now have this opportunity to increase the value of their homes by repurposing. And if you need help in this regard, please reach out. This is what we do. We help a lot of people do this sort of stuff. We got experts that we work with, both in construction, planning, and design, that can work through homes of this nature to get the maximum return on it. So hats off to Vaughan. Congratulations. One of the last things I want to talk about is this Indian fiasco. You know, the Prime Minister literally shit the bed on a diplomacy level by making this a big kerfuffle with the Indian government. Yeah, I get it. You know, there was an individual that got murdered back in June, a Sikh who was a Canadian citizen after 3 denials of citizenship. And as you know, listen, this is a little bit controversial, okay? But the reality is the way it was handled probably wasn't the most optimum way of dealing with it. But here's how it's going to impact housing, okay? This is my take, okay? So we now have the Indian government expel some diplomats. I believe they've expelled 41 diplomats that were in India. They're sending them back home. They've canceled all visas traveling to India, and they are now making a mockery of this situation. You know, they're mentioning allegations of the Prime Minister, you know, doing coke on a plane, which I think is all BS and you know, smoke and mirror stuff just to get the clicks. But the problem is that what is the likelihood of Indians wanting to come here and be educated? I want to point out a couple stats to everyone so you could kind of put this in the perspective from a 35,000 foot level, okay? Tuition fees in Canada represent $23 billion a year. $23 billion with a B. To put that into perspective, the whole auto sector in Canada is about $18 to $19 billion. Okay? So when you think of the number 23 billion, of that number, 85% of it is international student tuition. Okay? Let's follow me for a sec. Approximately 41%, according to the Bureau of International Students of Canada website, come from India. 41% of students come from India. 51% land in Ontario. So this is going to be a problem because all of a sudden there might be less demand for housing, because a lot of folks are taking advantage of investment properties for student rentals, converting these properties to multi-units, okay? And that was chasing a lot of money. Now, if there's a little diplomatic spat between Canada and India, what are the chances of those numbers regarding international students from India actually maintaining themselves or growing? My guess is not going to happen. So we could very well see a reduction in non-permanent residents, including the foreign students coming to Canada because of this kerfuffle. So it's really intriguing to me because I really believe we got a problem. Okay, we really got a diplomacy problem. Like, this Prime Minister is really having a hard time staying out of the spotlight for the wrong reason. Like this guy can't just stay out, like go hide, don't say anything, like just go away for a little bit. Take a vacation and don't show up anywhere. We have to control this. We have to create an environment where we could prosper. We've alienated the Chinese. We're alienating the Indians. This is not good, folks. This is a bit of a shit show. So hopefully we could use some back-dealing diplomacy, try to clear the air, try to make these folks in India a little bit happy, and maybe hang around with people that are desirable. Like, with all due respect, you now have the UK Prime Minister condemning the actions of these extremists, okay, in the UK. So he's not on our side right now. He is Indian, so, you know, we got an issue there. So now this thing has become a global issue, and we're really looking bad. We really got to clean this up and figure out how to solve it, because I think it's going to impact demand and supply. Last thing I want to talk about is assignment sales. Everybody needs to be very, very careful with assignment sales, and I'm going to explain why. Over the course of the last few weeks, we've had 2 clients that have reached out to us that have sold pre-con condos on assignment to somebody else. And they've now been contacted by the builder to say, you need to close this in 3 weeks. And they're like, well, what do you mean? I've sold these condos. Like, why do I have to close it? The person who bought it has to close. Not the case. The people who bought on assignment can't close. So the contract reverts back to the original buyer. And this wasn't explained to the vendor or the current the original contracted buyer, and it's created a shitstorm when it comes to, what do I do? I wasn't expecting to do this. So folks, the assignment market is a disaster right now. We're seeing more and more challenges of people buying at market values that can't be supported with appraisals, okay? They're having to come up with shortfalls. It's tough. They're scrambling. They're asking for more people to go on title to get qualified, borrow money. It's a shit show. It's a mess. So if you are in a situation, please reach out, try to be proactive, try to plan for potential problems. If you've sold something on assignment, reach out to the people who bought and make sure they could close. Find out, get that realtor who helped you sell, get engaged with that purchaser to make sure everything is in order, because the last thing you want is a surprise. Nobody wants surprises. On that note, happy Thanksgiving. See you next week. Take care.